Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. So recently I have been getting loads of comments and messages from the community asking to look into this one company. The company reported earnings 3 days ago. I think they were down about 3-4% last time I checked. This is one of the best companies out there with regards to, if you are a dividend investor, this is probably one of the best companies out there. If you are looking for long-term growth in terms of price appreciation, in terms of dividends, if you're looking for low beta company, that is company that is not too volatile, if you like, this is probably one of the best companies out there. So what I'm going to do today is try to explain to you what the business does, and of course then explain to you the financials, see basically things like the revenue side of things. So is it growing revenue? Are they buying back their own shares? Do they have a growing EPS, growing free cash flow? We'll look at the other margins, things like the invested capitals, return on invested capital, return on equity, all of these things, and debt levels. So we're going to look at all of that, and then at the end I'm going to show you the valuation side of things, because that's the important part. Yes, it is a great company, but is it actually heading in the right direction with regards to the growth of these two important things, EPS and revenue? And the most important thing is valuation. Is it actually undervalued at this point in time? Because there's no point buying a company when it's overvalued, and then of course you kind of reverse it to the mean, and what happens? You're going to lose a lot of money. So if they started to, of course, go back to where they belong, which is the intrinsic value of the business, which normally happens. Okay, we've seen that over the last whatever years. So let me get started. Let's talk about this. But before we do that, it takes a lot of time and effort to put these videos together. I would genuinely appreciate if you can press that like button. It doesn't cost you a penny. And if you are interested to see more of the things that I do, then come and join us on the Patreon account, where you get access to the family portfolio. You can ask me any questions. You can send me your portfolios. I've now caught up with all the portfolios. So if you have not sent me your portfolio yet, if you sign up, there is a spreadsheet there where you can download the spreadsheet. Then there's questions. It will ask you specific questions. You need to fill that in, send it to me by email, or either just upload it to the to the Patreon account as a chat. Then I will have a look at it. I will give you my honest opinion of what I think about your portfolio. Again, it's something light-hearted. I'm not, of course, a financial advisor, but I can give you some ideas of potentially what you could do, inshallah. Right, let's get started. The company we're going to talk about today is Waste Management. The Waste Management is not just, it's the company that we have owned before, and they are one of the companies that collect, they do waste collection, disposals, recycling, landfill gas capture, and renewable energy services. All of these things they do for normal residentials, commercials, industrials, and so on. So they are doing a great job out there, but we just need to know if this company is potentially undervalued at this point in time, and it is a great buy. So as you can see, year to date is actually down 1%, when the S&P 500 I think is about 15% up this year. And as you can see here, $197 was the 52-week lows almost. And right now we're heading towards that, which is quite interesting. And if we look at for 1 year, you can see it's about 9% down. For the last 5 years is 85% up. For the last 10 years, this is again just price only. For the last 10 years, if you had this company, $267 basically it's 267% up if you had that company over the last 10 years. And now we're just going to look at other things, so including the market cap. So 82 billion market cap. So it is a huge company. It's not a small company. They do pay dividends 1.6%. It's been around 1 point something since I've actually started investing. So this company has been consistently trading higher multiples, in my opinion, for the last whatever years. I bought it twice, and twice I had to sell it because by the time I bought it, I was hoping that it will come back down a lot so I can buy more of it, and it stayed that way. So let's see what happens moving forward. But yes, it has been about 1% for the last whatever years. Dividend is safe. Okay, so 80% is safety when it comes to that. Credit rating, we're looking at A-, which is strong. Now, if we look at the payout ratio, which is basically the net income, the amount of the net income the company uses to pay that dividend, is 43%. So that's very moderate. So it's very small, if you like. 10% latest increase in December of 2024, they increased it by 10%, which is nice. For the last 5 years, about 8%. Normally, I'm looking for 7% or higher. So this time it's actually 6.5%, 7% is what I'm normally looking for. So this one has got about 8%. Over the last 10 years, about 7%. So it's really done really well. And as you can see, they consistently increased this for 21 years. I bet you they want to become a dividend aristocrat, and that is a company in the S&P 500 that have increased that dividend for 25 years or more. Okay, 50 is the dividend kings. So 24 more years, they will become a dividend aristocrat. $3.30 is what you will get for every share of this company that you own. If you basically, you just have to buy the stocks now before this 8th of before the ex-dividend date, and you'll get paid basically whatever the quarterly share is. Now, in terms of looking the dividend theory side of things, this blue line is, if this dotted line is above this blue line, that means it's overvalued. Under it, that means it's undervalued. But within that line, is sort of reasonably valued. And that's where it is right now. And I think it's over the last whatever years, as you can see here, it's been above that. Then in 2022, it has come back down quite a bit. Then it's gone up again. And then it's been sort of in between there for quite some time. So nothing has changed with regards to that. So the 5-year average for this company is 1.56% for the last 5 years. Right now it's 1.62. So which kind of tells us potentially is getting into undervaluation, if you like. The 5-year average for the PE is 27.6, and right now it's 25.2. So potentially it might be undervalued at this point in time. Again, that doesn't tell us the full story. Earnings per share is payout ratio is declining, which is nice. So that means they're paying less. You know, their net income is increasing, so they're using a bit of their net income to pay us those dividends, which means they have the opportunity to increase even more. So the fact that they've done it 10% recently shows that they're happy to increase that. Free cash flow payout ratios also has declined, which is nice to see. Earnings per share has been growing every single year. So if you look at it, 2015, they were paying $2.61. This is what you want to see every single year. Of course, 2020, there was a massive dip. Not massive, just a little bit because of COVID. And then after that, it bounced back, and since it's been going up, you know, every single year since then, and is basically expected to grow next year as well, which is quite nice. The free cash flow per share is also heading in the right direction. Now, it is important for a company to basically have a growing earnings per share year after year, and is genuinely very important for us as long-term investors. The other thing that's also important is the sales. Okay, so the sales part, we also need to see that growing as well. $13 billion in 2015 to right now $24.8 billion, which is absolutely amazing. So that is also be heading the right direction every single year, apart from 2020 when the COVID hit. Now, they're also buying back their own shares. They have been buying it for quite some time. That dividends increasing, they're buying back their own shares, revenue is growing, EPS is growing. So return on invested capital, we're looking at about 29%. Return on equity, 29%. Return on invested capital, 11%. For this type of company, basically, normally we're looking for 8%, but anything above 10%, I'm happy with it. 15% is even better. Operating margins of 18% and free cash flow margin of 10%. Now, debt levels, it's not the best. Okay, so we're looking for anything below 3. It is still below 3, and it's actually gone down. Basically, next 12 months is expected to go down, which is fine. So absolutely nothing to worry about with regards with this business. It looks like a very well run business, and the fact that it's very boring. Okay, but I will show you against the S&P 500 what I'm talking about. And this is one of the reasons I love this type of business, that low beta. That means when the stock market crashes, these companies actually tend to do better. And I'll show you, in fact, let me just quickly show you. And during recession time, they've actually increased that dividend. So 2007 to 2009, they've actually increased it. Recession sales actually decline about 12%. Okay, in the base, whereas the other companies have actually way worse than this one. Okay, recession return. Okay, if you look at 2007 to 2009, it was negative 20%, 40%. The S&P 500, we're looking about negative 55%. So they've done better in recession times because, you know, they've got lower beta, and of course is one of those companies is not very speculative. So now we've seen the financials. The company seems solid. So the other question we need to ask right now is, okay, is good business, but what we want to know is what is the expected earnings growth for the next couple of years, and then look at the valuations. Okay, so we know the company's been doing well over the last whatever years. Now let's look into the future. Okay, and this is basically my way of thinking about these companies, and that's exactly what we're going to do now. So in December 2025, basically around the corner, so we're going to leave that one out. 2026 is what we're looking at, so that's about 12%. Another about 13%. This has been changed over the last couple of days, I think, because it's maybe it hasn't actually, I can't remember. It's about 9 to 13% in 2027, and about 7%. So normally I focus on the first three because that's where majority of the analysts are looking at. Now when it comes to revenue, we're looking at basically about 6%, another 5%, 7%, and so on. So nothing huge. Okay, and this is what you expect from this type of business. You expect that 6-7% growth in terms of revenue side of things, and about 12-13%, even 15% sometimes if those companies are doing well, but between 7 to 15% in terms of EPS growth. That's a very mature company, because companies have a different life cycles. So this one is a very mature business. And just to kind of finish this one off, so you can see gross profit margins of 40%, EBIT margins, EBITDA margins, they look fine. Net income margins, everything looks fine to me. Like they're all in the green basically. There's nothing to worry about with this when it comes to this company. Now what we're going to do is look at the valuation side of things. So I'm going to start with this one here. While we're here, I want to look at the Seeking Alpha analysts, what they're saying. So we got 11 strong buys, 4 buys, 9 holds, and 1 sell. Now that has about 23% upside from where we are. $275 per share is where they think the price should be. Now if you bought it right now, that's basically 23% upside from where we are. So that would be absolutely amazing. Now let's have a look at using fast graph, because this is one thing I've been using over the last whatever years, and it really is quite decent in terms of helping us value stocks. Okay, so at 2020, so when I've actually started investing around here, the company was already overvalued. So if you look at that was the right time to buy. 2009, when that recession hit, that's the right time to buy this company. And if you held it since then, okay, you would have made your 10,000 will have become 91,000 US dollars. Okay, but of course, who knew? Now if we just reduce this to the last 10 years, okay, as you can see here, it's been overvalued over the last 10 years. Basically this is the price, that black line on the top, that's the price. This is the earnings side of things, okay, at the 15 PE, and that's what Mr. Market likes to trade. So it's been trading around in and out of that blue line over the last basically 10 years, but it's never actually reached basically that intrinsic value here. So this is one of the reasons why I've never felt comfortable to hold that company. So let's see. So let's go back to Max and then look at the forecast moving forward for this company. So if we look at it right now, okay, based on that 15 PE, then which is normal, if you bought this stock right now, you would think you would actually lose about closer to $3,000 of your money. If we use the normal multiple, which is what the blue line was, so if we go back here historically, okay, that blue line, that's basically that we looked at over the last 10 years where that company has been, that is what we call the normal PE. If we use that normal PE for this company, which is that 28 PE average, okay, then right now if you bought the stock, you would be making about 38% on top of your money by the time we get to 2027. So it seems a little bit undervalued if you use what it's been trading, but again, who knows where it's going to be in the next is it going to hold that 28 PE? So from this side of things, it seems interesting. So let's now have a look at how the company performed against the S&P 500 over the last whatever years. So we're looking at the last max, and if you scroll down here, you will see since 2004, okay, the company has basically returned, that's total return, that basically includes dividends, growth and dividends at the same, okay, altogether, your 10,000 would have become 80,000 US dollars. The S&P 500 would have given you 64. So if you invested VOO or SPY, whatever, 64,000 K is what you would have right now if you invested in 2004. But if you invested in this company, you would have 80,000 right now. Now, if you look at that 10.5%, that's the compound growth for the last 10 years, for that period of time, and the S&P 500 is actually 9.32. So not much, massive difference, but it's still you beating the S&P 500. You beating the S&P 500 with a company that basically recycles rubbish and so on. So again, I'm not just dissing the company or anything, but I'm just letting you know the truth. Okay, now with regards to free cash flow of the last since 2021, we had 2.4, then about $2 billion, about 1.8, 2.1, and then now we put back to 2.16. So it's slightly gone up in the last 12 months, which is quite nice to see. So overall, it's a great company. It seems undervalued at this, according to whatever, but let's now have a look at sort of an average price for this company. Okay, and because that's important for me, this is important. Morningstar basically has given us valuation of $198 per share. And I genuinely, I've always talked about Morningstar valuation because I like their discounted cash flow models that they use, because they're quite realistic. And also, I feel like it gives us a little bit of a margin of safety. Okay. Now, Wall Street is saying, simply Wall Street is saying $205. Now, Seeking Alpha, we've already seen that $249 per share. I used the dividend discount model that gave me 234. Multiples have given me 238. When you average all of these things out, you get $217 per share. The price of the stock right now is $200 per share. If you say to me right now, I'm a bit worried about this company and I need 10%, I would say that is what I would do personally. Okay, and it has to hit below $195 per share for me to be interested in this company moving forward. It's a great company. It is just, like we've seen, the dividends is actually solid. They've got excellent free cash flow and so on. So I would be comfortable holding this company, buying it, below $195 per share. If it hits 190, even better, because that gives you extra cushion as well, because anything that can happen, we've seen with recessions and things like that, things can easily change. Now, if you say that 10% is what you need, then it's 195. If you say, do you know what, I'm okay with 5%, then of course it's a buy right now, because $206 per share is where the price that you should be buying at this company. But in my opinion, I'm just going to wait, inshallah. If it hits that basically, like I said, that 10% to margin of safety, $195 per share. And to be honest with you, it's not even far off. Right now, we got that $200 per share. That can easily change. It takes 1 day or 2 days to basically drop this market or whatever the overall market drops, and then we're back there. So yeah, that's the company that I want to share with you guys. There's a few other companies that have reported this week, so inshallah we'll be looking at UPS and a couple of other companies. They have also reported on Monday after the close, so that's why it was down quite a bit. We'll see how it goes in the next few weeks. Visa has done well overall in terms of the companies that I own that have reported already. Today after close, Microsoft, Apple, Meta, we're going to see a lot of the big boys reporting today, and including ServiceNow. So it will be interesting to see what happens tomorrow. ADP reported today. It's down quite a bit. It's another interesting one that I'm looking at right now. And then on tomorrow morning, we've got Lilly. We've got Merck, both of them reporting. That's in my portfolio. It will be interesting to see what Lilly says. It might help with the situation with Novo. It might not help it at all. But then on Thursday after close, we've got Amazon, Apple, and a couple of other big boys reporting. So we'll see how things go. But I will keep you updated, inshallah. I've got a lot more videos planned for us. If you can like in the videos, that will be massive help. Have a wonderful day. Assalamu Alaikum.